with us. What angered you most about what happened yesterday?
Well, I mean, they basically, the name of the company is Robinhood, steal from the rich, give to the poor, and they did the exact opposite. They stole from the poor and gave back to the rich. I unequivocally don't believe what he just said, Vlad. I think he's lying about that.
But Robinhood is free, it doesn't charge commission, and the way that their business model works is they sell their order flow to market makers, which are these sophisticated Wall Street participants who execute the orders for them. The market maker they sell the most of their flow to is a hedge fund named Citadel. And Citadel is not just a hedge fund, they are also a market maker, they are also a technology company, they are owned by a billionaire named Ken Griffin, who is out of Chicago, who has funded some very questionable things in his political giving. But Citadel pays for Robinhood's order flow. And strangely enough, or maybe not so strangely, one of the hedge funds that Wall Street Bets was very excited about blowing up, Melvin Capital, was rescued by Citadel after it blew up. So Citadel is paying for the order flow on Robinhood, which is driving up the price of the stock, which crashed one hedge fund. And then Citadel sort of bought that hedge fund on the cheap after it crashed.
And so, for folks at home, so that we can put these dots together, because I think this is an important relationship for us to communicate and map out with you. So basically, also what you're saying now is that you've got Melvin Capital, right? Melvin Capital is the hedge fund that was shorting GameStop. They were the folks that were saying, we're going to make a ton of money. We're going to make a ton of money off of GameStop's stock going down. Wall Street Bets comes in, potentially with folks on Wall Street looking at what Wall Street Bets is doing to kind of supercharge this activity and say, you know what, we're going to make the stock go up, which would, of course, put Melvin Capital into an extraordinarily compromised position, which would essentially prompt them to get bailed out by one of the groups known as Citadel. Now, so Citadel then swoops in as one of the actors to bail out Melvin Capital, but Citadel's owner also co-founded a different Citadel. They're both connected, hence the same name by the same owner. They are two technically different entities though, but they are with the same founder.
Right, so Citadel LLC is the parent company. Citadel Securities is the market maker that buys the Robinhood order flow, but the parent entity, Citadel LLC, is the one that swooped up Melvin Capital. And Congresswoman, I should just add there were actually two Wall Street firms that bought Melvin Capital, or rescued it, I should say, Citadel and another one, now I'm blanking, of course, on the name, but it's the new fund of Steve Cohen, who you may know as the owner of the New York Mets. And Steve Cohen is famous for all the wrong reasons.
Is what the chat says.
Yes, thank you. Steve Cohen is famous, or infamous, I should say, because he used to have a hedge fund called SAC that pled guilty to insider trading in 2013 and had to shut itself down. And so this is the next iteration of Steve Cohen.
Right. So we've got Citadel and then Point72, who bail out Melvin Capital, who are relying on GameStop stock to tank. So Citadel swoops in to bail out Melvin Capital. But then meanwhile, this connected Citadel under the same founder, it also receives the advanced information from Robinhood. That's what you're saying.
And again, in the history of the stock market, don't ever hear the rich guys, the institutional firms, the hedge funds saying, hold on, we're making too much money. You better protect us in case it goes the other way. This seemed like it was just the little guy was winning and the rules changed on the fly.
Yeah, it seemed like panic. I think to everybody it seemed like panic. They've clearly had to raise a lot of money as well to shore up their own position. They're like a young company though as well, and they've had this swarm of new investors coming onto the platform. I guess you could make the argument that they have to make sure that people have the money in their accounts to be able to buy these stocks. But Dave, I think you raise a good point. This stock's up 1,000% year to date. Action should have been taken surely earlier and should have been communicated better.
Yeah, and I saw his interview on CNBC, Vlad, and this is a direct quote from him. He said it was not a liquidity issue, and he said it was to protect the people on Robinhood. That's garbage. How did that protect the people on Robinhood? I'd like to find one person on Robinhood who feels that they were protected. They literally intentionally cratered the stock, unless they're the dumbest people alive. If you only let people sell and you can't buy, pretty obvious what's going to happen to the stock, and that's exactly what it did. It cratered it.
And then they relaxed the rules. Again, Robinhood not here to defend themselves over what they were doing, whether it was to shore up their own position, that artificially created selling pressure, because that's clearly what we saw in the market. I think to your point, you know, Dave, the access to these platforms is free. And part of the way they do that, the business model, is they get all these orders from people and they give them to a bigger company. This case, one of them is Citadel Securities, and you've mentioned the name, so I'm bringing it up. And they get paid for that. And that's also, I think, what's created this sort of stinky sense that perhaps information on their positions was being shared with one of these hedge funds, quite frankly. But that hedge fund says